Hello traders. Today is the 17th of December 2010, and happy trading to you all. London is open, okay, and we are now in a gap period, what I call a waiting time for New York to open. That's what I call the gap period, okay, a very tricky period to trade in, which means between 7 a.m. Eastern Time till 9:30 Eastern Time is what we call the gap period. Is not very suitable for day trading. Okay, the gap period between 7 a.m. Eastern Time and 9:30 Eastern Time. Okay, when you are waiting for another market to open. Okay, especially London open first. Okay, and then the markets open for 3 hours or so, and then people are just adjusting their portfolio because of New York that is coming up. Okay, so that's what I call the gap period, the period between one market that has opened and the time to wait for the next market to open. This is what we call the gap period. It's also happening sometime during the Asia session. You have a Tokyo that is open, okay, for some time, and then you have to wait also for Hong Kong to open. Okay, so the waiting time for Hong Kong to open also, that's what we call also the gap period. Okay, if you want to trade also, you have to put the timing into consideration, the best time for day trading, and all this into consideration. Okay, this video is about my favorite subject, the Elliott wave subject. Okay, and what do we see here? Because we are on this is a 4-minute chart. Okay, it's not very solid like on a daily chart. So you need to be very tolerant with me when I'm showing you all the waves here, because it's not solid as it is on the daily chart. Okay, let's start straight away. Okay, what do we see here? We see the first wave. Okay, the first wave has started from here all the way down here. Okay, that's the first wave in this down move. Okay, and then we have the second wave up to here, and then we have the third wave to this level here, and then we have the fourth wave here, and then this is the fifth wave right here, end of Elliott wave. We are expecting the Euro USD to turn around and start going up. What I'm going to do now, I'm going to remove some of my drawing. Okay, that's what I do. I draw most of the time on my chart. I say very important to draw on your chart. Okay, so I will remove all my previous drawing. Okay, what is happening here? I will call out the first wave. Okay, the first wave, what I will do, I will call out the first wave in white. Okay, call out the second wave in green. Okay, that's the second wave. And the third wave, okay, which is my favorite one, I'll color it my favorite color, which is a yellow, of course. And then the fourth wave, I will color the fourth wave in blue. Okay, and I will color the fifth wave again in white. Okay, so we start with white, we end up again with white. Okay, so this is the fifth wave, 5 wave of Elliott wave of this move to the downside. According to Elliott wave, in a downtrend, the market will move in 5 waves. Same thing if the market is in the uptrend, the market will move in 5 waves plus the ABC correction. Okay, so if I try to predict what I'm not in a business to predict the market, I'll follow the market. Okay, but if you want to estimate, okay, the word to remember is estimate, not to predict. Okay, the market will do something like this: A, okay, and then I give a B, okay, and then I give the C, okay, ABC pattern, okay, somewhere there. Okay, so that's what we call the estimation of the ABC pattern. Okay, the market does not have to do it. Okay, it does not have to do it. That's the theory. The theory is one thing, because like I said to you before, some traders pay attention to all the details. They are very smart people. Okay, they have a very analytical mind. Okay, but when it comes to trading, they have difficulties, because trading is a different environment. You must be able to be flexible, to change quickly. Okay, and if you to cut losses, if you see the price doing something that you are not expecting, you have to close it. Okay, But some traders cannot do that. They stack that they are courageous, or their mind, okay, the way they think, okay, does not allow them to make those adjustments quickly, okay. But the best traders are those who are quite simple, okay, and they can adjust quickly, because all we are doing is to watch what the price is doing and to follow it, okay. So you don't try to go ahead of the price, you let the price lead you. So the price will show you the direction and then you follow, okay? The good thing about taking the trade here is because you are in a pole position and with a tiny stop loss of 26 pip, okay? So this type of trade, you let it run, okay? You allow them to take you out, okay, in this trade. I'm not trading this now, doing this for educational purposes, because we are in a gap period. I do not trade during the gap period. London will open at 3 a.m. Eastern Time. You stay in the market for 3 hours or so, and then you stop, okay? If you are day trading. A different rule will apply for swing trading, okay? So right now, you are in this pole position, the fifth wave here. You let you very tiny stop loss 26 pip, and you let it run. If you want to stay in, you can stay in so that they can take you out, okay. That's happened. Sometimes you take a trade like this and you allow the market, if the market is going to take you out, you take you out, no question about that. All you say at the end is ouch, okay, a bit of pain, but it's all right, okay. Now, so we have the 5 waves here. What is happening here, if you go into the mind of other traders, right here, I'll draw another horizontal line to you to show you why the price is trying to go down further. Where I'm drawing another horizontal line, I'll call that the horizontal line pink, okay? Now, in this region here, we have the pivot level, the central pivot level, okay? That's why I said to you, when you are trading, you must have the pivot level on your chart. If you look carefully here, when I'm rotating my cursor here, there was a support here. It's a very nice support right here. The price touch it based in time. And some traders came out here. Those who trade this third wave here, they came out here, okay. Now, the price can turn around perfectly here, but because of the pivot level, the central pivot level, the R1 is here, where I put my cursor now, the R1 is here. So the floor traders would like to bring it by all means to their central pivot level. They do it all the time. They'll move it from R1 down to the central pivot level. That's why it's so important to have your pivot level R1, R2, S1, S2, and the central pivot on your chart, so you can understand what these people are trying to do. As you can see, they are very, very desperate traders that try always from R1 to R2. That's how they trade. Because they don't understand the market very much, so to I mean, these people can trade perfectly, but we can have a fun of them a bit, you know. Sometimes it's annoying because how they trade, because these people force usually the price, okay. They will force it from one pivot level to the next pivot level, and then as soon as it goes below it, they will force it again from one pivot level to the next pivot level. And it must, believe me, these people, they do it all the time, and they will force it till it touch the next pivot level, okay. So be aware of those people also in the market. They do it all the time. As you can see here, they move it from R3, okay, this is the R3 pivot level, down to the R2, okay, which is here. They move it from R2 down to R1. Now what are they trying to do? They try to move it from R1 down to the central pivot level. Be aware of that, okay. That's why it's so important to have your pivot level on your chart. Sometimes you see the price try to consolidate between the R1 and the central pivot level, but at the end of the day, these people will force it by all means to the pivot level. The pivot level will allow you also to manage your trade very well, to know where is the best place to place your stop loss also. So this is the good thing about the pivot level, and also to go into the mind of other traders. I do not use the pivot level to make my trading decision. I use them to just go into the mind of other traders to see what these people are trying to do or what they are thinking, okay, to to spy on them, so to speak, okay. So this is the first wave, okay. second wave, third wave, fourth wave, and the fifth wave. Normally, the third wave is the longest wave, but like I said to you, we are on a 4 minute chart, so I said to you, it's not as solid as on the daily chart. Okay, so this is what is happening right here, right now. Okay, so first wave, second wave, third wave, fourth wave, and the fifth wave, the end of Elliott wave. Now we are expecting the ABC pattern, ABC correction pattern. If there will be any ABC, it does not have to do the ABC. Okay, it's not a science. As you can see, the price went up. Okay, big time. The euro in the night time Asian session till London open this morning went up. Okay, excellent move since London opened at 8 a.m. Okay, went up nicely, touched the R3. Okay, and it turned around again, it retraced back completely down again. Okay, so because of the market sentiment and the meeting of the Europeans regarding their economy, okay, the fundamentals are playing into the technical. Okay, there's a bit of fight, not between the bulls and the bear this time. It's a fight between the fundamental and the technical regarding the Euro USD, as you have seen it. Okay, so you know exactly what is happening here. Another thing I want to show you is that as you can see, the price went down first. It went down nicely all the way here, and then retraced back up here. Okay, that's what I show you if you watch my previous video that I titled the downtrend. Okay, where I draw those videos, I do them for a purpose, and they are powerful information in it. Okay, if you haven't watched it, the video that I titled the downtrend, there's another one I titled the uptrend, another one I titled consolidation trend. Do not think that you know everything about uptrend, downtrend, and consolidation. There are excellent information in this video. Please study them because this is what is going on all the time. So the price went down, displayed this a rally. Some people will call this a flag or whatever, a pennant or a flag. Okay, call it a flag. So what they will do, so if you don't know about the flag pattern in a downtrend, this is one of them for you. This is a kind of a flag. So the price went down, display flag. Okay, it looks like a flag, isn't it? Yeah. So it looks like a flag. Yeah, this is it. Okay, so what they will do, they will do the projection of this distance from here to here. Okay, so you can go on Google or YouTube. My fellow traders put excellent video there, and you can watch them regarding the flag. What is the flag? And then they project it here. So the distance where the movement, the first wave has started to the downside. Okay, up to here, they project it down here. You see how the price respect that distance? It went down all the way here. These people took profit. Those who are trading the flag pattern here, they took their profit here. And now the price display another flag here. Okay, which is another flag here. Okay, you see here there was another small flag, if you want to call it pennant or whatever. I'm not into the name of the thing, I'm more into the practicality, so bear with me. Okay, so there's another one down and a flag again, and they want to project this distance again. That's why they try to force the price, okay, down again. Okay, so they wanted to bring it somewhere here. Okay, and then they are satisfied that their game is done. Okay, so you see now it's consolidation like this, but some traders are forcing the price to bring it to their target here. So you need to be aware of the flag pattern also. By looking at some of the Fibonacci traders also, this is how you do. You go into the mind of other traders, because people are using the Fibonacci, people are using the flag, people are using the chart pattern, people are using the pivot level. As you can see, people are using all sorts of tools in the market. Okay, I use the TSTW24, and I'm aware of all the other traders also paying attention to other traders and trying to go into their mind, so you will know straight away what these people are thinking. But if you are counting the wave, okay, you know that this is the third wave, and if you want to play the fourth wave, it's up to you. And it went down. Okay, so this is a tricky zone. Okay, what I'll do, put a bit of spotlight here. Okay, so this area where I put the pink line will be better support level. Okay, they will try to push it up. If the market is controlled by the fraud traders, they will push it all the way to this central pivot, which is so important for them before they are satisfied. Okay, so this is it about the Elliott wave: first wave, second wave, third wave, fourth wave, fifth wave, and the A, B, C correction. We'll see. So if the price is respecting the ABC correction, if you bought it in this zone here, okay, let me show you clearly what I'm talking about here. Bear with me, please. Now, if you bought it here at this level of 13249, your target will be somewhere here at 13296. Okay, almost 50 pips. Okay, 50, which is not bad. Okay, with the ABC correction to the opposite direction to the downtrend here. Okay, the ABC correction is a contra trend to is a contra trend to the major trend. Okay, so the price went down, the ABC will be uptrend. Okay, going up. Okay, if the price was going up and become the 5 wave, the ABC correction will be going down. Okay, as I show you in my previous video. So this is about Elliott wave. Why is so important to know about Elliott wave? Because some traders, whenever we talk about Elliott wave, they will just switch off completely. Okay, they'll switch off completely or walk away. Okay, but I mean, I'm serious here because the Elliott wave theory is based on the psychology of the mass. Okay, the psychology of a group of people. So because we are dealing with a group of people, people are using the moving averages, people are using the directional indicator, people are using Aron indicator, people are using Fibonacci, Elliott wave, all sorts of indicator in the market. So this is a mass psychology. Okay, so we need to use something that will allow us to quantify, okay, the tendency of the group, because it's not individual. You are not alone in the market. Okay, so this is why Elliott wave is so important. Also, why you need to know, because you don't want to suppose the price going down like this. As you can see, you are counting the waves. Okay, you don't want to sell here. You don't want to sell here, because this is the worst place to sell, because you see the price going down, going down, going down. The professional are counting the way they count the 5, the 5th wave, they are no more interested to sell here. And but because probably you're using a one particular tool that is telling you to sell on top of the 5th wave in a downtrend, it's the worst place to sell in a downtrend on top of the 5th wave. That's the worst place to sell. The best place to sell is on top of the 2nd wave right here. You see? So you, with the Elliott wave, you know your best setup. Is all about knowing the best setup for yourself. What works for you, okay? Your best signal. So if you're using a MACD gives you a sell signal here, and you know also about the Elliott wave, you will be quite happy to take it after the trend line is broken. If you are using RSI indicator, okay, and your RSI indicator is overbought and the trend line is broken, and you are quite happy here, and you know also this is the beginning of the 3rd wave, you take it, of course. So many traders will use one particular tool and they will say that this is what you need. That's it. That's the only thing you need. You need the exponential moving average 200. That's all you need. Or some people will say all you need is the Bollinger Band. If the price crosses below the middle line, you sell. If it goes above it, you buy. That's all you need. Or somebody will say, or all you need is MACD. And another person will say something else. But everybody is right, because every tool will work at one point at one time. But the combination of all the tools, understanding that this person is using this tool. That's why I show total respect to every trader in the market. Okay, the losers and the winners. Okay, those who are losing are the one that is paying us. Okay, so we show them respect also. We show respect to the brokers. Sometimes they take our money, but the truth of the matter is that we are also after their money. So people come and take people out of their position. That's how they make their money. Okay. A market is manipulated through the news, but it's part of the game also. It's allowed. So that's why we have to pay attention to the news. Balancing, other traders will use the fundamental. Right now, people know that there is a situation regarding Spain. Okay, so the fundamental traders, okay, will come in, and all they are looking for is to sell, sell, sell. And you'll be wondering what sort of indicator these people are looking at, because they do their calculation. They say that the euro is kaput, so they want to sell. Okay, we that use the technical say now, no, it's not the best time to sell. The euro should go up first before you can sell at one particular point. But getting the balance, which we call the media line, okay, which is the middle line of trading, is the Elliott wave. Okay, you may disagree with me completely, okay, but that's my personal view. But you do not have to to be expert of Elliott wave in order to use the Elliott wave. To put it simply, is that when the price is going down, the price has a tendency, because it's the mass, we go in 5 moves. That's it. If you don't want to call it wave, call it moves. So one move to the downside, a rally back up, which is a wrong movement to contra trend. People sell it down, which is the third move, try to go up again, which is the fourth move, and the people sell it down, that's the fifth move. And then people take profit, which is the A, B, C correction. If it's going up also again, we'll see one move to the upside, and then a retracement to the downside a little bit, and then the biggest move to the third wave, okay, third move, and then another move to the downside a little bit, which is a fourth move, and then the fifth move, which is another move fast to the upside. This is all about the psychology of the market, okay? As you can see, the price stagger here, okay? I was expecting it to come to test the central pivot, which is the pink line here. I'm very surprised that the floor traders were quite happy to turn it around here, okay? Because these people, they control the market, they move it where they want to move it to before they let everybody go, okay? So that's why you must have the pivot level on your chart, okay? Also knowing about the chart pattern. The chart pattern that you must pay attention to, I'll tell you a few of them, and you promise me to go on YouTube or Google to learn from those subjects. The flag, okay, the flag, you can have a flag in the downtrend, the pennants, okay, and also the triangles, okay, descending triangle, ascending triangle, symmetrical triangle, okay, and also you learn from the inverted head and shoulder, the head and shoulder pattern, the round pattern, okay, the cup and handle patterns. With those patterns, you know exactly what's happening. Another thing also you need to remember is the definition of a downtrend. Just using that definition alone will keep you out of trouble. In a downtrend, the price will display lower lows and lower high. As you can see here, there was a low here, there was a lower high here. You don't want to buy here after the trend line, but you don't want to buy because you know the definition of a downtrend. Same thing in the uptrend, the price will display higher lows and higher highs. And just paying attention to that, you know straight away. If you look carefully here, this video is quite long, okay? I'm allowed to do that because YouTube allow me to do. So now, you are not, like you see here, the price went up, okay? Here, it's not very good uptrend here, so that we can learn something here. Now, take it from here, okay? I'll put this video. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell anything. Suppose you see the price here, okay? Now the price went up, okay? Trace back. So if you put another, this is quite of a higher low here, okay? Compared to this one here, we have a high first here, but the price went up. It went up from here, tried to go up. Look what happened. It couldn't display a higher high compared to this one here. This high here was equal high. You must sell after this trend line here is broken. This is about just using the definition of the uptrend. You see now, a low, a higher low, a high. Price failed to display a higher high. We must look for opportunity to sell right there. You see, after this trend line is broken. Okay, now. And then it came back again. If you look carefully here again, if you look carefully, there was a high, a higher low, another higher low. If you draw the trend line here, you can see that even though we didn't have a higher high, the lows are still high. Okay, so we draw in the line like this. Okay, the lows are still high. Okay, bear with me with all my drawing. You see a low, a higher low, a higher low. Okay, so the price went this time again from here and break this level here. So you will draw, you see, just drawing on your chart. Okay, following the price, understanding this definition. Now finally, the price break, look for what's happening here. The price break this resistance level, went above it nicely bullishly. You see, that's how you want it, bullish confirmation. A bit of pullback, look at that, a nice one, and rally to the upside and hit the R3. That's why it's so important to have the pivot level on your chart to go into the mind of other traders. If you do not have the pivot level on your chart, you won't know that there was R3 here, that some trader will be definitely taking profit here. And if you are not careful, you give everything back. That's what's happening here. But if you have the pivot level on your chart, you'll know straight away that R3 is here, and you will pay attention to it. You will not just disregard it, you will pay attention to it. And also, if you know that the floor traders also move from R2 to R3, after the prior move from here, you know straight away that the next target for them is R3. They are likely to grab a bit of profit. R3 is quite high enough, okay? And they sold it down, okay? So just using the definition of the uptrend and the downtrend together with the chart pattern. This video is quite long. I was waiting for the price to move so we can see our ABC correction, but it's taking a bit too long. I will leave it like this for you guys. I hope you understand what I'm talking about, all my blah blah blah. I thank you very much. We thank you for your support, all the people rating our video, watching our video, some of you sending us also email. We appreciate everything, okay? And there are people who send us email very often. Sometimes we don't reply to some of them, but we take every email into consideration. And we thank you very much for everything. I hope you enjoyed this video also, that you put into practice in order to cream this market consistently. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Thank you much.